All right, Diego, what's going on, man? I'm gonna try to make this a little bit quicker. It's March 30th, Sunday. I'm gonna go over real quickly, hopefully, the market first of all in general. We're gonna look at the strategic market. Here's the S&P on a weekly basis. Each bar represents 1 week. Here we are right now, and we're just still in this range, right? Not too much going on, and, other than high beta getting crushed. Uh, but the S&P is holding up very well. And Nasdaq has been a shit show. Biotech's been crushed. High beta, all technologies had a tough go of it, but S&P is still holding in. So right now, as long as it stays above this little uh, flag, the bottom part of the flag, I got no problems, right? What I'm hoping for is this to go maybe sideways and work off some of this overbought situation in here. If it can just go sideways, stay in the range, and then at some point break above, that would be a great strategic move. But we'll see. I'm not going to get ahead of myself on it. Uh, there have been some cracks in the foundation, and the cracks have been in the Nasdaq, like I just said. This is the Nasdaq on a weekly, very different chart, right? Here you have, it's almost this head and shoulders pattern we have here. Uh, you got this, I don't want to do that. Here's the left shoulder, here's the head, here's the right shoulder, and we broke below this neckline here. Let me draw you a little neckline. Uh, Here's like the neckline right there, broke below it. So basically, the move, the projected move will roughly be the difference between the neckline and the high, and we're almost there, to be honest. I mean, we kind of, maybe 4100 would be, could be the support level, but you know what? 61.8% retracement level we almost hit on Thursday. It might work. We'll see. I actually have a little bullish bar here on the daily on the Nasdaq, and we'll see. We'll see if we can bounce off of here, and if we can, that might be the impetus to really get the S&P back, out of the range to the upside. And I mean, that's it in a nutshell. I mean, I got, sort of anticipating some sort of bounce in the Nasdaq. May not happen. It could take a couple days to develop. We might even get below here, but then at some point, I anticipate us to break, bouncing here. I mean, we definitely have a pretty extreme down move. So if at least we break that trend line, we'll see what happens. So that's it. 3 minutes on the market. Strategically, we're still looking good. Tactically, S&P's holding in. Nasdaq has been in a tough spot, and we'll see if Nasdaq can bounce, and that maybe the S&P or the sectors that have been holding up relatively well can lead us higher. And again, one of the sectors that has done very well is utilities. Here's our utility sector on a weekly basis. We're right back to almost the year highs, and if we break above, I have a target of 558. Right now it's 526. 558 would actually bring it above last year's high. So that might be a nice continuation move in the utilities. Utilities that I'm in is DTE. Here's Southern. I'm in Southern. I'm actually looking to buy some more above these 43.5. If we can get a break above this level here this week, buy some more. We're looking for it to get above 44. I know that's not exciting. It's only a half-point move, but when shit goes up and they pay a dividend, and that's what you got to be in, right? DTE, I actually loaded up some more last week. That made a new high, so we'll see if that can continue. AEP, I'm not as much as I have been in this, but I bought some more back last week, and if we see if we can break above this downtrend line. ETR, I bought some of that back last week. If we can break above this line here, make a move into the $68 range. Again, utilities, looking for that next week, see what we can do there. And And I know that's boring, and you probably don't want to hear about it, but that's sometimes you gotta take what the market gives instead of trying to have an opinion. Uh, Stocks that were that we had a bit of an opinion, but actually didn't trade too bad with DDD's technical analysis to get us in and get us out, right? And we have saved ourselves a lot of pain in DDD when this was the earnings, and I sold pretty much all my position on that day because it just did not do what it should have done. They broke above these levels, and then it closed weak. I said, you know what, with all the volume that happened that day, that tells me there was distribution, and sure as shit, the market, and if that was a warning when it broke below these levels here, that was definitely the time to get the hell out of this thing. Bought some down in here. I think I made a point and a half or some incredibleness in this little bounce here, but sure enough, no no sustained move, new lows, right? But one good thing that's happening in this 3D printing stock is that on Thursday, instead of making a new low like everything else, it actually made a higher low. So that is a little bit interesting for me. Plus, we got a little relative strength, telling me somebody might be supporting the stock in here, and I may be interested in buying above $61, which is this high right here. We have a nice little contracted day on Friday. If they can pop it above 61, maybe we get to 65. Yippee, yippee, IA, right? But the key with that is if it can breaks above a prior resistance, hopefully that becomes support, which will be $61. The next resistance is around $64, 65, whatever that is, $64. And then if they can knock up against there, keep this $61 support, maybe then they can at some point can break it above $64, right? And then the next resistance will probably come in here in the high 60s. And that's the only thing we can, way we can look at it. And so I may buy some more, but buy some at 61, get back involved in it. And the nice thing is when you didn't ride this thing to down in here and hold a position from up in here, I can get back involved at above 61 and feel good about it. SSYS doesn't look as good. It's much worse. He actually made a much lower low, so I'm not interested in that. DDD is the player, the 3D printer I'll look for next week. Brazil, I talked about last week. This thing has been an absolute freaking killer, man. So hopefully you bought some of that when I mentioned it a couple, I don't know, last week or whenever the hell it was. I actually mentioned it a couple weeks back because I think this may be the play of the year. This may be one of those in 2-3 years. You bought it last week. Almost at multi-year lows. You would be the genius. All your Brazilian friends would think you're a freaking hero and the best money manager there is. And you'll have $1 billion under management when Brazil, uh, um, makes new highs at some point. But I'm getting way ahead of myself right now because it just is, that's the first move. What needs to happen, if you look at it on a weekly basis, what we need to see happen here is it really needs to get above this, draw it out for you. It has to get above this downtrend line first on the upside, because that's been the resistance. Every time it bumps up against it, it sells off. Bumps up against it, sells off. Bumps up against it, sells off. So the next time it bumps up, it'll probably stall there, anticipate it. What we don't want to see is come down and make new lows. We want to see it kind of bump up and then hold in there, and at some point it breaks above, and that would be your bullish wedge pattern. If you see here, it's like a little bullish pen, and then it breaks above that level, and then what we should see is some moves back up into these 2011 highs. That's the plan right now. If you bought it last week or two, you're sitting in good shape and you're just kind of holding it. I wouldn't buy it right now, but it's probably a good hold for now. Stand by for part 2 of this video. I will talk about Apple. I will talk about Facebook, Twitter, and all those good stocks that you love. All right.